You know, Bob, self-employed folks can get pretty creative with their tax returns, writing off everything they possibly can to get that taxable income number down in an effort to pay as little income tax as possible. But that tax return can actually be an obstacle when they're trying to purchase a home and not reaching the price point they want. But we have other loan programs that can help get there.
Yep. And you know what, Rick? Let's talk about that.
Hello and welcome to this episode of What's Their MO. I'm Rick Masnick.
And I'm Bob Orlando, and today we want to talk about mortgages for the self-employed borrower.
And as we stated in our opener, self-employed people are going to write off as many expenses as possible to get that taxable income number down to a point where they're paying as little income tax as possible.
Right, exactly. So when you're qualifying for a mortgage, we're not only taking your final adjusted gross income from your tax returns, but we have an income qualifying sheet that we use, and so we'll actually add back some of the items that you may have written off.
Yeah, but that may not be enough to get you where you want to be for the home you want to purchase or refinance. So what happens in those cases is we have access to another loan program called bank statement, a bank statement mortgage.
Right, and these bank statement loans are great, but there are a couple of different options that you can use for each, and each of them have their own benefits. What we basically do is we take an average of your deposits for either 12 or 24 months, and we'll calculate a cash flow and use that as income for qualifying purposes. And most programs will allow you to use both your personal and or your business bank statements to calculate the deposits.
And it's important to know that this is not the dreaded subprime mortgages that we saw back in the mid-2000s. The loans are limited to 80% of the purchase price or the appraised value, the lesser of the two, depending on if you're purchasing or refinancing. And you're going to need to have a very good credit score.
Yeah, and we're not really giving specific credit scores here because each loan scenario is going to require a different minimum credit score. But short and sweet, if you're a self-employed borrower or tax returns and you're not showing a lot of taxable income, but have a strong history of bank deposits, there's a mortgage product for you.
Now, if you found this information useful, please like, share, and subscribe to our channel. If you know someone else that this information could benefit, please pass this on to them. But for now, that concludes this episode of What's Their MO. I'm Rick Masnick.
And I'm Bob Orlando, and we'll see you next time.